This week on Money Unleashed, we're going to talk about why the market has changed direction in early 2022. Now, I don't spend a lot of time trying to predict the future of the stock market, but recently the trend in the market has turned down, and I'd like to take a few minutes to discuss. There are a few key things that are leading us down this path. Number one, the Fed has started shrinking the balance sheet before they're adding to the balance sheet and before the first rate hike. In other words, the Fed is ahead of their previously discussed timeline. The truth is they need to raise rates and stop buying assets as to not cause a bubble. Some would argue this has already happened. December inflation was also reported at 7.1. This is the second thing. 7% CPI is scary data. We discussed inflation in previous posts, and if we stay in this environment with high inflation, it could be fatal, especially for retirees. This market is going through a re-rating of investor expectations. When the cost of money goes from free to up a little, the market starts to have volatility. Investors are very aware the easy money train has left the station. The question is, are we at the bottom or not? It's very hard to tell. So make sure your portfolio has a long-term focus and you clearly understand the equity balance that you currently hold. Thanks for joining us here at Money Unleashed as we go through educational topics and all the great things at the Hoffman Financial Group.